This is Frontier Opening Bell. I am Bosun Amofaye, and I welcome my panelists today to the show. Let me get a bit gender sensitive and introduce Oreoluwa Odetunde, who is a macroeconomic strategist at Greenwich Merchant Bank. Oreoluwa, good morning.
Good morning, Bosun.
Thank you so much. We appreciate your time. Joshua Debisi from Vertiva Capital Management, a banking analyst. Good morning, Joshua.
Good morning, Bosun.
Thank you. And Ali Kansachu in Nairobi. Thank you so much, Ali, from Rich Frontiers Management.
Thank you, Bosun.
Thank you, ladies and gentlemen. Let's get the show started by looking at the Pan-African markets. For the Nigerian market continue in the negative trajectory of, again, profit booking after a rally that we saw that took the market to one of the best levels so far this year. Around emerging and frontier markets. The Ivorian market was down 0.4%. The Egyptian top 30 was up 0.33%. The Kenyan market was, 0.05%, 140.14. And South African GSE strongly above 55,000 level, 0.67%. Let's go straight to Nairobi, where we're looking at the East African market, and this story about how the authorities in the revenue agency are monitoring traders' daily sales tax to avoid tax evasion. And Tesco is the big story from the UK, suspending supplies from Kakuzi over human rights abuses. The Capital Market Authority, that's the SEC in Kenya, has okayed Pesasha's crowdfunding platform within the Kenyan capital market. And Imperial Bank, KCB, has taken over deposits of about 3.17 billion. What's going on in this bank? I need to have an idea. The Tanzanians are going to the polls for a presidential election on October the 28th. Just a few days before that, Barrick Gold is paying the government $40 million US. That looks a little bit head-scratching to me. I don't know if Ali has an idea why this money is coming at the last minutes to the elections. Ali, hit the ground running for us first on this Kakuzi story and Tesco in the UK.
So Kakuzi is one of the plantation companies listed at the Nairobi Securities Exchange. It was historically a tea plantation, but they pivoted to avocados, macadamia nuts, and various other produce. Their avocados are quite delicious and much sought after, and in the UK market, Tesco's, Marks and Spencer's, Waitrose are all buyers of their avocados. For a long time, there's been a backstory about people in the neighborhood needing to walk through the plantation, being badly treated. And now there is a court case which has been filed in London by a law firm called Lee Day. Amal Clooney is leading that court case where the allegations of rape of villagers, there's even an allegation that one individual was beaten to death by some Kakuzi security. So this popped up on Sunday in the Sunday Times in the United Kingdom, and it's caused a massive furore. It's a collision of the issue of human rights. Tesco's obviously could not handle the heat and have suspended supplies from Kakuzi. Here in Kenya, Kakuzi put out a press statement which was quite idiosyncratic, talking about Kenya no longer being a colony, which I don't know really was the right tone to take in the response, because these are serious allegations. The export agency came out in support of Kakuzi and said it's all because Kakuzi is producing these wonderful avocados, and this is a hit job by its competitors. So a huge lot of brouhaha and noise in the background. I think Kakuzi would be wise to address this issue substantively. It's now well beyond a very poor press release into the Kenyan space. I think they've got to deal with this, and they've got to deal with it fast. And frankly, you this has been coming for 24 months, if you knew what the backstory was, which the company obviously did. So one of the best performing shares at the stock exchange has full year earnings were up about 50% because of that pivot to avocados. And of course, we're in this new avocado economy where all the millennials like to trade Bitcoin and quaff avocados at the same time. So you've had this huge demand surge as well, which they have ridden quite well. But a big story. I think they thought it was going to go away. It isn't. It's growing, and I think they've got to deal with it as soon as they can. Going back. Sorry. Going back to the other.
I guess we need to watch what happens to the share price of Kakuzi moving forward.
Correct. I think it's very tightly held. Camellia PLC, a UK company, has majority 51.7. There's been one local investor who's been building a stake. He's got a double-digit percentage stake, and then we have small local shareholders. So it's thinly traded. It's well held. It has a good dividend payout. It's a good port in the kind of COVID economy storm we're in. So I don't really, frankly, think there'll be a big reaction, but let's keep an eye on it over the next couple of days. Kenya Revenue Agency to monitor traders' daily sales in new law. This is symptomatic of the African disease at the moment, that all these governments want more tax just at a time when our economies are in the slow lane. And you know, as Dennis Healy once said, you can't squeeze the lemon till the pips squeak. And my concern here is that, we're in an environment where revenue is depressed, and by piling on pressure on people, it just makes it more difficult. However, this is all about the digitization of tax, and the Kenya Revenue Authority have to be commended for seeking to, plug themselves into the real time. The CMA had a scheme where if you had a crypto or a blockchain idea, you could go into a sandbox, a little bit like Singapore. And Pizasha crowdfunding platform is the first company which has gone into the sandbox and come out of it, with the regulator's stamp of approval. So that will be interesting to see how they get on. It's the first step, I think, for Kenya Inc. into that space, which is growing at leaps and bounds. I think that, in line with the statement I just saw by the CBK talking about cryptocurrency, aligning themselves with the Swiss authorities, tells us that the authorities in Kenya are now playing catch up and looking to catch up fast.
Touch on quickly on Tanzania, Ali.
Yes, yeah. So this is Barrick Gold. I don't know if you remember, there was what was considered by many people a shakedown. President Magufuli shut them down. This is Acacia Mining, is actually the company in Tanzania, now fully owned by Barrick Gold. He basically demanded a bigger share of the revenues and an equity stake in the business. Barrick Gold basically, in a lot of people's opinion, folded, because once you're in there, it's very difficult unless you're prepared to shut the whole thing down, which is what Magufuli gave them, that choice. So they came up with an arrangement of a one-off payment, pretty substantial. This $40 million payment is part of that one-off payment. As you correctly alluded, the timing of it is very interesting because, as we all know, we got an election coming up, and there's been a lot of noise about that election. Tundu Lissu, who was shot 16 times, has come back to challenge the incumbent. So it's interesting that Barrick Gold chose this moment to cut that check. But as far as the mining industry is concerned, a lot of people felt that they were treated quite poorly, and that Tanzanian political risk for extractive companies was blinking amber. And I think this will be looked at in that overall perspective. Thank you, Ali.
Let's speak a little bit to the West Africa and Nigerian market. Today we have the finance minister doing a breakdown of the 2020 a budget for Nigeria to be about 10 o'clock local time in about a few minutes from now. We expect that to happen. The media will be covering that, and it's going to be online also, by the way. Union Bank's getting $40 million facility from the International Finance Corporation. Today is a big day when you look at the World Bank IMF annual meetings, which started yesterday. The World Economic Outlook and Global Financial Stability Report will be released today. Let me get Joshua Debisi to speak very quickly first to the Union Bank story, $40 million also from the IFC.
Right. So thank you, Watson. I think obviously in the broader context, I think this is not the first time we're seeing a Nigerian bank getting money from an international body. Usually it's to fund things like trade. It's mostly for the real sector anyway. So they should be able to give out facilities and things like that, and to also help the bank's FX liquidity somewhat. Now, I think a lot of these cases, what we end up seeing is that these funds are used, to bring in things like factory equipment or machinery that requires FX to import. So I think this will definitely go towards a specific direction like that. However, obviously, I think overall $40 million, depending on how you use it, I think it can go a long way, but it can't really go that far. But for a bank like Union Bank, it will definitely be a boost to either their loan book, their foreign loan book, or at least to their operations over a certain period of time. I think in the near term, at least between now and the end of the year. Overall,
so how do I trade
encouraging? How do you take the news?
How do I trade the news?
Oh, I mean, well, overall, the idea is that, first of all, we know that Nigerian banks in general are quite deft at the moment in being able to take a bad situation and make profit out of it. So I think this will help management to continue to do that. So ultimately, I can only say if you're an investor and you're interested in Union Bank, this news should not make you buy more, and yet this news obviously will not make you sell just yet, because I think all these banks are heading in the right direction. So that's how I'll take it.
Okay. Let's leave it there for now. Let's hang it in there and ask Oluwa to speak to the macro side. The finance minister is giving a further budget breakdown today. What are you looking for in that particular development when it takes place this morning?
Well, we've seen the presentation of the 2021 appropriation bill last week when the president presented it to the National Assembly members. Well, it was a different, it wasn't anything different from what we've seen over time. The 2021 budget was more or less in tandem to what we've seen in 2020 and 2019. The only positives that we saw was that capital projects actually increased more or less in relation to capital expenditure. So we saw capital expenditure at about 30% in relation to what we saw it in 2020 and 2019 at 23%. We also saw that there was an increase in sectorial allocations to, the health and the education sector. We also saw that, some of these major assumptions of the budget were more realistic compared to what we've seen over time. So we've seen that current prices of crude was about $40 per barrel. Current production was about 1.86 million barrels per day. So these are a little more realistic compared to what we've seen over time. Exchange rates was still, at 379. But I think some things that were of more concern to us was, the ever increasing budget deficit. At about 5.2 trillion. This is really high. And I think when we put out a note, we mentioned that sustainability is one key thing that will be called into question let me put it, we called into question. We've seen over time that real interest rates have remained sustainably higher than our real GDP growth, and this has not been very has not it's not been able, it's not bode well for the economy in any way. So we look at that. We also look at the fact that our private sector investment has actually been low. We have the government coming out to issue financial assets to raise debts more or less to finance its budget. And we saw that last year the government did not even tap into the Eurobond market, and it was largely in the domestic market and loans from our multilateral sources, which we still expect to be sustained, because I think the vice president did come out to say that tapping into the Eurobond market at this time would increase our high risk premium on our financial instruments. So more or less our private investments might be a little, it will be crowded out, but we expect that the monetary accommodation we've seen so far from the monetary policy easing, liquidity levels have been sustainably higher, so it has more or less moderated the crowding effect we are expected to have seen from this high budget deficit.
Okay. Thank you, Orelua. Let's look at the Southern African market. And of course, the big story that runs across this was the Moody's emerging market story that emerging market sovereigns will suffer lasting revenue losses, about 2.1% of the GDP this year. Today, we are getting, from yesterday, we started getting data from South Africa. Factory output was down 10.8% in August. Today, we're expecting the mining production data. Tomorrow is going to be the retail sales figure. Let me ask Joshua very quickly. When Moody speaks about the revenue losses that emerging markets will suffer, I'm sure the talk is basically about South Africa. Somewhere in the report they mentioned Ethiopia, but I think for frontier economies such as perhaps Kenya, Nigeria, will need to watch this also very closely.
Sure, but I think overall, again, I think we said this thing before, that these reports usually are generally very bearish on emerging and frontier markets. They always take the cautious stance when it comes to these things, because overall, I think they expect that the effect of a slowdown in growth and a fall in commodity prices, or sustainably lower commodity prices, will greater impact emerging and frontier markets. So I think that is generally the reason why we see this kind of tone with regard to talking about markets like your Ethiopia or your South Africa or your Kenya or your Nigeria. But overall, I think there's still some encouraging signs. Maybe perhaps not for South Africa specifically, but definitely on the continent. I think a lot of things are happening. Although these things might be more linked to debt than we would like. Overall, I think things will get better as time goes on. So I'm not nearly as bearish, and I generally tend not to agree with the tone these international bodies like the IMF or the World Bank take when speaking about our economic growth or economic recovery. Although obviously they bring up some solid points.
I haven't been able to find a middle point between the bulls and the bears. I don't know what to look for in the animal book. Do you have any idea, Ali, by the way, if you're not so bearish, you're not so bullish, what do we go for?
Well, I think it's tricky navigating, it's quite a choppy environment at the moment, and we've had, this outstanding rally in Nigeria in the stock market, which I think a lot of people miss. Local investors grabbed that with both hands. That's really an interesting story. I think the currency play, the Rand, big rebound from March lows, that could have been a nice way to play things. So I think you've got to be quick, you've got to be not fixated, and then there are plenty of enormous opportunities to capture, if you've got the guts.
Okay, so in terms of the macro, we're talking about South Africa now with the data stream coming out.
So just to touch on your headline, which was the factory output data, it's fallen 10.8%, 12 months through August. It bounced about 3% month on month. But, it's been declining now for 15 months, and South Africa is a manufacturing powerhouse in comparison to other African countries. So it really means that they're finding it difficult to get back to growth. I heard yesterday Cyril Ramaphosa saying they're not going to meet their debt targets either. Look, they're in a very, very tricky space. I think, they are quite integrated with the rest of the world. They are dependent, I think, on that pull effect from the global economy beginning to pick up speed. Reasons for optimism might be that China has so far managed to come out of this whole thing relatively okay and relatively intact, and is on a growth curve, and therefore might exert a pull effect on South Africa, which would be positive. And then finally, just to touch on your Angola story, inflation at 23.2% year on year in September. This is all about the currency, which fell out of bed. But, we've seen recently the president there make quite good strides. They've negotiated with the Chinese, which is one of the few African countries to manage to pull that off. The IMF, the World Bank are all getting behind them. I think they like what they're hearing from State House over there. So I think, Angola is another interesting prospect for those who like to look at bombed out situations. I would be, having a look around, but I suppose a lot of that will depend on the oil price, about which I'm not that bullish, because I think demand really got created by COVID.
Okay, let's now talk about North Africa and the Libya's oil production from the Sharara oil field is one very big story. It's not surprising what the EBRD is doing, lending 3.92 billion Egyptian pounds to Alexandria, a petroleum company for green project. The transition is already ongoing around the world. Yesterday, the International Energy Agency released a very bearish outlook on the global oil demand and oil price recovery moving forward. Joshua, when we see outlook from agencies such as the IEA or the EIA, the Energy Information Agency, that global oil demand will not recover strongly until 2023, I'm sure the tail end of that is the price. What do you think this means for Nigeria's oil-dependent economy moving forward?
Well, it doesn't bode well for us. I mean, if oil prices remain at such depressed levels, just for 2021 alone, this 5-point-something trillion deficit we're talking about will grow even bigger, I think, as time goes on, and we might not even be able to fund our budgets, and it might just be majority deficit by the time we reach 2023. Although that is only if we continue to be an oil-dependent nation, if we don't, fix up and expand other aspects of the economy. Although I think some of those things are being done at the moment, we need to pick up speed significantly so that we don't get caught with our pants down, because at the moment our production levels are quite low and oil price is quite low. So government revenue is already suffering massively. And unfortunately for us, that's a huge part of our economy. That's a huge part of where the government gets its foreign exchange from. So our foreign reserves will suffer if oil prices remain depressed or even get worse. Then we would be in a really bad, we're already in a bad situation, but we'll be in an even worse situation, I think. But hopefully, we find a way out. We definitely need to continue to focus on other aspects of the economy that have been ignored for too long. But if we are not able to do that quickly enough, then definitely there will be some trouble.
What's your macro economic outlook on this report from the EIA?
Well, I think on oil, we are also quite bearish about prices for crude oil, even though we expect, a bit more recovery for 2021. because there'll be easing of some of these restrictions. Probably a vaccine will come in, and some of these pandemic scares will temper downwards. We're still seeing the capacity from more of these OPEC oil buyers are still quite high. So you're seeing China is still having a very high capacity and cannot take so much more crude, and you're seeing all these oil suppliers having to significantly reduce crude oil so as to sell. So yes, we are in complete agreement with them that it might take a while. And then we're also seeing this supply glut, which seems to be increasing more or less. So Libya has opened up its oil fields. We're also seeing that if the likelihood of bidding coming into par in November would probably would see a tempering down of some of the sanctions on Venezuela, some of the sanctions on Iran, and if crude oil starts coming in from countries like that, and we would see a bit of supply imbalance more or less in the crude market. So that's my take.
Ali.
I think when it comes to the oil market, really, COVID has been a circuit breaker when it comes to demand. And whichever way I look at it, I'm not seeing a snapback recovery in demand. And I tell you why. I think a lot of it is to do with behavioral economics. Until people feel completely safe, I think flights will not be back to capacity. They're still way below the norm from the previous year. So I think it's going to be a long drawn out recovery, and therefore what I found interesting was just the news about this Libyan oil field, which is I think their biggest oil field coming back on the market. You saw an immediate reaction in the oil price. WTI straight away slipped to below 40. So I think, it's a market which is in a very tentative equilibrium at these prices, and it doesn't take much to push the price lower, in fact. And the pressure will build on a lot of oil producers who are short of revenue. So in those sorts of environments, it's very difficult to maintain discipline on the supply side. And I think this year it was a triumph of supply discipline which allowed the oil price to recover from that extraordinary negative price sell-off we saw earlier in the year.
Whatever it takes, Libya is not going to let go of its opportunity to come back to the global oil market. I'm sure they're looking at between 1.2, 1.7. So don't talk about any discipline for now. As far as Libya is concerned, the central bank governor is waiting for that oil money, and they want to see how much of it they can take at least before the end of fossil fuel, if that the time is anytime soon. So I'm sure that you're going to snatch their way in there between OPEC Plus and get back to the room where the conversation is taking place and sit around the table. Thank you, everyone. I appreciate all of you this morning. Gorioluwa today, macroeconomic strategist from Guinness Merchant Bank. Thank you so much for coming on the show. Joshua Debisi, we appreciate your time. We appreciate having you, banking analyst at Vertiva Capital Management. Thank you so much. Have a great day. And Nalikan Sach, you have a profitable trading day in Nairobi at Rich Frontiers Management. Bye, everyone. Thank you so much, and see you next time.